How do you make yourself audit proof? Well, there's quite a few things that you can do. A really, really big one is no commingling of funds. And here's what I mean. If you have a side hustle or a business or something that you do in addition to your full time work, you don't commingle funds. You have one designated business account, ideally, specifically business. Ideally, you go to the bank and open a separate business account, get a tax ID, and all of those things. And then, if you need money from your business to your personal, you just make a direct transfer, business to personal. You do not pay personal expenses from the business account. And here's why. When you pay personal expenses out of business, you have what's called commingled funds. So let's say you go to a restaurant, one day it's business, one day it's personal. You buy office supplies, one day it's business, one day it's personal. Think about it this way. When you go for an audit, you show your receipts. And the revenue agent asks, one of the first questions in a questionnaire is, do you pay personal expenses out of business? And you have to be truthful when you do that. And what do you say? You say yes. So now you've just equipped your auditor with presumption of personal until proven business. So when you do that, it will be the burden of proof will shift to you to prove that, okay, this is what I am looking at. This is business. Here's a receipt. Here's all of those different things. Now, legally, receipts are required. You have to keep a receipt for anything over 25 or 50 bucks or whatever that is. In reality, in modern day audits, what happens is that if you show your business bank statements or credit card statements, that will suffice. However, if you have commingled funds, then you've again just given your auditor an ability to say all of this will be presumed personal until you show me a receipt of who you met with, what was discussed, what did you order, and all of that. So business purpose essentially. And remember, all expenses have to be reasonable. There's always a reasonableness test for all expenses in the business or a side hustle or whatever. And so that's kind of why we care about not commingled funds. It's not only does it make your accounting more expensive because we have to account for your personal transactions, even though we book them, good accountants book them into equity, which means it goes against your equity as if you were taking money out. You don't want that because it still gives us a lot more work to do, a lot more transactions to handle, and it also gives the auditor the power to say this is all personal until proven business. So that's why I always say commingling of funds is important to never have. And it will also influence how and when you can deduct things. Because what we ideally strive for is for you to have a designated business account, ideally an EIN. Ideally, you never want to operate as a sole proprietor, right? You want to have something, an LLC or whatever. And so that's why when you do have one of those things, one of the entities, either it's an LLC, a corporation, or whatever partnership, you will have a tax ID, which you then can use to open a bank account. Now, when you open a bank account, all of your business transactions will go through the bank account. If you are lucky to get a business card, credit card, then it's even better because then you can have a business card that's attached to your business. You have really good bookkeeping and you never ever spend it on personal stuff. So when you're at a gas station, for example, and you're going for a business meeting to the city, whatever, I go to business meetings in the city all the time, you pull out the right card when you pay. Same thing if you're at a Staples and you are buying a toner for your printer for the office, you pull out a business card. But then if you're buying a backpack for your child, you pull out a personal credit card. And yes, it's okay. You'll have 2 checks for that trip. Not a big deal. A bigger deal is if you're paid for your personal stuff with business, because then the auditor will suspect every single expense to be personal. Also, keep this in mind. The IRS's agent's job, the revenue agent's job, is to open the file, do their job, make an assessment, collect, close the file. If you're making their life harder, and if they suspect you're lying or not being forthcoming or truthful or whatever, they will probe more and more, and you're making their job harder, and you're really not doing good for your own sake. So what I recommend is, when you work, when you have a business card designated, already mentioned that, have a business account, all of your expenses go through that, have good accounting that's timely, and then you can actually save some money, because US tax code is geared towards small businesses. There are a lot of provisions there that allow small businesses to save money, because in the US traditionally, small businesses and mid-sized businesses, business in general, was always supported and promoted. And honestly, the reality is that it has built up the US economy, and so it, rightfully so, it has been promoted. But you have to do it right. There are many professionals out there, and we'll talk about what kind of accountant is right for you in a different video, but there are different professionals in the US. You don't have to have a license to prepare taxes or do accounting, do bookkeeping. But usually that's a recipe for potentially an awful situation, because when you don't have a license, you don't know what you're doing. It can often cost you a lot of money. So when you do the right accounting, it gives you power also to know what to do in the upcoming months. Let's say if you're in September and in April or March you will have to pay tax, knowing where you are today will accomplish two things. First, it will accomplish you knowing that your accounting is correct, because if you see a profit that's much more than you would expect, then you would be like, why, where's the money? And that's how mistakes can be uncovered. Or if you know in September that this is where I am, this is what estimated tax I'm going to pay, you have the ability to do something for the next 4 months, maybe buy new equipment that you were going to buy anyway, or buy that computer for the team, or whatever that is, you still have the power to do. And that's the power of really good accounting. When you have really good records and accounting done for you, or do that yourself, which I don't recommend, especially for your own business, typically you have the power of time to change something and or get ready for the tax payment. Okay, because what I don't like is giving clients bad news in April or March that you owe X, and they're like, how am I supposed to come up with that money? So, which generally speaking doesn't happen much for us, but it happens to other accounting firms all the time. So to make yourself audit proof, you have to have a good professional, good accounting, no commingling of funds, and you have to be audit ready. Download all of the bank statements and credit card statements for every year, because yes, the banks store 7 years worth of statements. However, sometimes in the midst of it, you switch banks, you close the accounts, and now you no longer have access to that, and you forget about it, because you never get audited today for last year. You get audited 3-4 years after you file the return, before the statute of limitations runs out. And then there are two different statute of limitations that you have. So that's why it's important to download all of those things as you go, ideally once a month. If you have an accountant, ask them to do that for you if they support you in that way. But ideally, you want to have all of that stuff downloaded and filed for every year, so that if you ever get audited, you just pull up that folder and that's it. You're ready to go. All right. I hope this was helpful, and I'll talk to you soon.